We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners at Burke Britain Financial Partners. So this is the Fine Answers podcast, a little bit of a play on words. I'm not sure whether you've listened to us before. So today's guest is someone that our clients will have, they'll know. They've probably had something to do with over the last couple of years. If you're not a client and you're listening to this podcast, you might have heard our current guest on Ausbiz, The Call, Sunrise, Equity Mates podcast, SBS News, Channel 9, Adam Dawes, Senior Investment Advisor at Shaw & Partners. Welcome to the podcast, mate.
Yeah, thank you. It's great to be here.
Now, thanks for, you've made I think you might be the first guest that's made the journey down from Sydney just purely to come on the podcast.
Absolutely.
That's amazing.
I love it.
Yeah, and to go out for lunch. So Adam and I have just had a lunch with the team, and we thought we'd turn the mics on. And as a lot of listeners to this podcast would know, we try and give a bit of an introduction to people, not only from a technical point of view, and I'm sure we could talk markets all day, but if you're happy to, mate, we might go into the deep recesses of your memory and go back to your early days. Tell us a bit about where you grew up, where you went to school, and ultimately how you found your way to Shaw & Partners running a very successful brokerage.
Yeah, well, yep, we're doing quite well. But, interesting. Where do we go from here? So I grew up in Canberra, so coming from Canberra.
So were you born in Canberra?
Born in Canberra, raised...
Your folks always from Canberra or not?
Yep.
Yeah.
They live in Sydney now, but they're definitely Canberrans.
Yeah.
And had 21 years of my life there. So, grew up, school...
Where'd you go to school in Canberra?
Fraser Primary, as well as then Fraser was a dirt patch when we first moved.
So Fraser's the suburb?
Northern in Belconnen. It was a dirt patch, so it was one of the new suburbs. Now, obviously, it's very well established, but back then, and then from there went to Radford College, so a private school in Canberra, and then got out of school and went and did hospitality.
So just before we escape the school years, what did you do at school? Were you into footy? So Canberra's a bit of an interesting dynamic in terms of are they into AFL, NRL? What's the dynamic of sport?
I think they're all into all of it, really.
What were you doing at school?
We did union at school.
Okay.
But I played for about 3 games and then got my foot stomped on in a cold Canberra morning of -4, and that was it. I said, stuff this. I'm not playing union. So I used to play a lot of basketball and do a lot of rock climbing as well when I was young. So
Where'd you, in the
gyms.
Okay.
Yeah. So I've done that my whole life. So you sort of really enjoy that. But Canberra, good sports, but I decided money was better, so I started getting a part-time job instead of playing sport, and just kept. I started at McDonald's, and
as we all do,
and got a great career there. But worked there for many years, and I felt that was better use of my time than on the sporting field.
So obviously, we'll fast forward in a minute to today. Obviously, you're as an investment advisor, money manager, money's your thing, and markets are your thing. But when did the interest in sort of finance, markets, investments, when did that come to the forefront of your mind? Was it at school, or was it not until you finished school?
No, remember family ties.
So what did your parents do work-wise?
Work-wise. My mum was in finance. She was in mortgage broking, and when she finished, she was running PIS.
What's PIS?
Professional Investment Services. It was one of the biggest financial planning firms in Australia.
That might have had a little bit of influence on you.
That's right.
Yeah.
And then my dad was in insurance. So sort of sort of, it wasn't total finance, but we never really spoke about finance at the dinner table. We never really did anything. My sister is a financial planner.
Oh, okay.
I'm a stockbroker, and my mum retired. So it sort of naturally fell that way for us.
Did your parents have their own business, or were they employees for someone else?
Employees.
Okay.
Yeah.
Yep.
So good, Canberra-based, businesses. But yeah, it's like, and then moving to Sydney, which we're not fast forwarding, but yeah, moving to Sydney sort of opens your eyes up a lot more to what's available in finance, basically. Yep. So yeah.
So you did private school till year 12. You finished year 12. Did you stay in Canberra, or did you go to uni, or what did you travel?
Went to TAFE and did a hospitality course.
Yep.
And then from that moved up to worked in Canberra, and then moved up to Dunk Island and did a year on Dunk Island.
Where's Dunk Island?
It's up north near Airlie Beach,
Okay.
also south of Airlie Beach. And then from there went to Hayman Island and did a year working on Hayman Island. And loved it. It was a great experience as far as you're a young kid, no real responsibilities, and you get paid and they feed you while you're there. So you're saving up money. And so I saved up money to go overseas and did 3 years.
So how old were you when you disappeared overseas?
22, 23, something like that, yeah. So then did 3 years overseas. Working in bars and restaurants overseas,
As people do.
Yeah.
It's just, you stayed in London. Did you?
did a ski season in Whistler to start with, and lived and worked in Whistler for 9 months, and so did a ski season there, and then hitchhiked across Canada with a girlfriend at the time. So went across there, and then went to London, and lived in Edinburgh. London was a bit busy, so went up to Scotland and lived in Edinburgh for a year there, and I worked in behind a bar there and got to learn all about the single malts and the whiskies and all that kind of stuff.
Right. Cigars?
So, that's exactly where the cigars came from. Yes, exactly right. Because there's nothing better than a cigar and a single malt.
Absolutely.
Yeah, it's beautiful. It's a match made in heaven, just like oysters and champagne.
Yeah.
Or a nice Chardonnay. One or the other. I mean,
I must admit, I think I'm more of a whiskey. Whiskey's more my taste, but the oysters not so much. But whiskey and a cigar for sure. When you're in Whistler, were you a lifty, or were you in hospitality over there as well?
No, hospitality. So working 6 o'clock till 9 o'clock every night, slinging hot rocks in a Mexican restaurant.
Okay.
Carrying massive trays of hot rocks where they pour the chicken fajita on there.
Yeah.
So worked there, worked for tips, lived in the work village, which was halfway up the mountain.
I think I might have stayed there. I had a friend who was a lifty on Whistler. Yeah, the village is in Whistler, isn't it? It was Whistler and Blackcomb.
Yep, that's right.
And it was almost there was more Australians in Whistler than there were
100%.
Canadians.
Yep. 100%. We're everywhere, literally everywhere.
Yeah.
But then you got a good deal where you'd work up on the mountain for one day, for 12 weekends of the ski season for one day, and they'd give you a free dual mountain lift pass.
When you say work on the mountains as a lifty, or just
just clearing trays in the restaurant, like just being part of, helping, volunteering basically.
Sure.
But that gives you a free ski pass for both mountains.
Yeah.
So I think I did 86 days on the mountain, both mountains as a whole that ski season. So that was the bug. And then I've been snowboarding all around the world. But yeah,
do you still snowboard, or is the body?
No, the body's still good. I was up with the kids last season.
Where did you go?
It was Perisher.
Yep.
I've taken them to New Zealand a couple of times. I've done a ski
Queenstown?
season. Yeah, Queenstown. I've done a ski season in New Zealand as well. But the kids they love it as well. But it's so expensive. It's ridiculous.
Yeah, if you're hiring, we've taken the kids to Queenstown a couple of times, and you spend. We've got 5 kids, but I think we only had 3 at the time, and put one in Skiwee Land and one in whatever the other ski school was, and then hiring all your gear and getting up there. Yeah, it's a pretty expensive hobby, but it's a great hobby.
It is. Yeah, I love it. Absolutely love it.
I remember my first time when I went to Whistler in 2003, I think it was. I'd never seen snow before, and my first experience of snowboarding was in Whistler, in the powder at Whistler. Yeah. So I got spoiled my first time round.
Same with me.
Yeah.
I came from Canberra, even though the ski fields are 3 hours away from that. We didn't do a lot. Parents didn't have a lot of money, so but went over to Whistler, and that was my first experience as well. It's fantastic.
So 3 years travelling around the world, a little bit of time in New Zealand, that takes you up to probably 25-ish, and you land back. Did you land back in Canberra, or did you decide to position yourself somewhere else?
It lands me about 29.
Oh, 29, okay.
Yeah.
Maybe you spent a little bit more time than you thought overseas.
Maybe a little bit, like... about 28, 29. And then I came back from New Zealand after doing the ski season in 99, I think it was. So then from there... I worked in New Zealand. I worked in a record store, a CD store, at night, and then went snowboarding every day. But then worked at night, and so I felt like I was a kid in the candy store. It was amazing, getting all this new music. And this is when CDs were around.
Yep. What was the record store? Brash's? No. What do they have?
Brash's was the old JB Hi-Fi.
That's right.
Which we should have invested at $2.50. But anyway. No, it was called Play It Again. It was a private little. She owned it, the lady, and she was very eccentric. But so I came back to Sydney thinking that I wanted to get into music business. I wanted to be in music because I have a great passion for music as far as bands and listening to music. And so I thought I'd be in the business side of it.
Do you play any instrument yourself?
I play guitar.
Okay.
Yeah.
We skipped over that. How long did you play guitar for? Or when did you start?
Well, I still play guitar now, but I did Spanish classical for 4 years, and then after that just strummed. So yeah.
I should have brought the guitars in, mate.
Hey, kumbaya. We would have had a great
for sure.
Get the campfire going. Should be fine. So I wanted to be into music businesses, and so I started a course in Sydney where it was a music business course. You did 3 years or something like that as a degree, and working in hospitality at the time, working sort of another job, just obviously to keep things moving. And inside of the course, I had a teacher, and the teacher was talking about music business and how it worked, and then he put up the Robert Kiyosaki quadrant, right?
Yep. Cash flow quadrant. Yep.
There you go, right? And it was like it opened my eyes. I was like, really? Like, if I buy assets, I don't have to work, and it works for me. And when I'm sick, it still works for me.
And they generate income without me working for it.
And I'm like, what am I doing here? So I literally stood up, walked out of the music business course that I was enrolled to do. And then we did a couple of courses with the Securities Institute of Australia back then, which was more in the finance field or stockbroking.
So what year is this? You're in your late 20s, early 30s?
Early 30s.
Okay.
So I started at Shaw's when I was, I've been there 20 years, 30. I started 29, 30. And I had a complete career change of basically starting at Shaw's. So I did a couple of courses and then got a job in ING, data processing, and then from there went into... My dad had a friend who was at Shaw's who put my resume in.
Yeah.
They then said, and so I started at Shaw's working on a website, doing press releases for their website. So BHP in real time would talk to the brokers.
Yeah.
We would then type it up and get it out to the market before a 20-minute delay because everything's on 20-minute delay data. So yeah, it was quite a good little website. And so I started there earning $28,000 a year at 30.
Yeah.
And so not married, whatever, started my career in stockbroking back then. So then, met my wife the next year after that, and then...
Through work, or where'd you meet your wife?
No, through hospitality. She was...
Had you known her for a while, or...?
Yeah, we sort of got together, or started seeing each other in year 2000, but got married in 2003, and we've been together 17 years.
Yeah, so, and she's from Sydney or from Canberra?
Sydney.
Okay.
Bronte.
Okay.
Through and through.
Yeah.
So working at Shaw's, obviously then, which was good, got promoted a couple of times, took over the website, ran that for a while. And then from that, GFC hit, and I was doing sort of BDM work for the firm, and then they basically said to me, we're paying you too much money. GFC's here, you either become a broker or we're going to have to tell you to see you later.
Off. Yep.
And I've been working in the sort of the financial planning side of it, doing some BDM work for it. So they graciously gave me a little small bit of a book and set me on my way with my business partner Sam.
Yep.
And we've been 14 years together. So it's been a bit of a wild ride on on the job site.
So that transition actually into broking was one that was almost forced upon you. It was almost serendipitous in that the market dictated the move for you into broking.
Yeah, and it couldn't have got any worse. So it was the best time.
And now it probably couldn't have got any better. I'm sure you look back and think, thank God that happened, and I got the opportunity to become a broker. Yeah,
well, Shaw's is different. We don't get paid a wage. We're commission based only. So whatever you do or generate is what you. Yeah. So there's no wage. So I had to basically resign from Shaw's and then create my own company and start working. And
so you mentioned Sam. So those clients that are listening to this have probably seen emails or had correspondence or even spoken to Sam about a particular queries related to the market or particular holdings. Maybe we'll talk about how Sam and you cross paths and how you today are like the dynamic duo when it comes to operating your brokerage.
Yeah, so Sam and I. So Sam was from Citigroup, went to Shaw's. They basically, as they were giving me this book, they said you were too young. They said, you don't have any experience, but there's this other guy, Sam, who has this experience. You guys should team up together. And I was like, great, happy to do it.
Sam Crompton had been a broker for how long prior to that?
Another 8 years.
Okay.
9 years before that.
Yeah.
So he came with experience and understanding of markets and the research that it takes. From there, we got together. We had some dead weight and a couple of other people, so we got rid of those. And then we've run the business successfully. So Sam and I work really well together because Sam is the guy that does the research, looks at all the stocks, understands what's going on in the market, does all the reading. I ring him and he goes like, "Leave me alone, I'm reading," and blocks out 2 hours of the calendar just to read about what's going on and make some direction in the market. So he's in the sort of and then I sit in the front end talking to clients, bringing in the business, getting people to understand what we do.
Media, public relations.
So I'm out the front, he's at the back, and it works well because you can't have two people out the front because then there's nothing that really gets done, or two people in the back that can't really talk to clients. So we work really well together, and that's been, I guess, the secret of our marriage relationship. We've had a couple of tiffs and some close to divorce once, but it all sort of works out
as all partnerships do. Yeah,
exactly right.
You mentioned that, and if Sam was here, we might need to make the podcast a little bit longer. Sam, if anyone's spoken to Sam before, he can talk. He's a wealth of knowledge, but I suppose one of the things that points out, you talked about the research. Maybe if you can just talk about. I think from our point of view as financial advisors, one of the things that we value greatly about the relationship with yourself and Sam and Shaw's is that the ability to access research, and the fact that you guys are at the sort of the coalface of the markets and companies, and it allows us to do what we do and have relationships with clients and lean on you.
Yeah.
That's obviously a pretty significant part, being able to have the access to data and information that Shaw and Partners provide.
So yes, it is the data, and that obviously sums up the research sums up a lot of what the company's talking about. But it's not the only thing what makes the success of where we're going and what we do. Shaw's sees around 300 companies a year. So we've got, with reporting season just finishing, you've got this. There was 4 companies today coming into Shaw's that you had the ability to zoom into, or you sit and watch them face to face in the boardroom, and from that you get a lot more information out of the company and the sector that they're in. By watching them and looking at them and asking them the right questions, because a press release can come out and can tell you everything that they want you to know, right?
Yep.
But the difference is when we're sitting in front of these directors and then we ask them a question, right? Because we saw them 6 months ago and they said that they were going to do this, and this, right? And you go, tick, congratulations, you've done everything that you've said, but there's one thing that you haven't done. And can you tell me a little bit more about that? And that's where you get the director, bit of a shuffle in the chair, the touch of the collar, the flitch of the ear,
eyes to the sky,
and then goes with his story, and you can go, that's BS. And I've walked out of directors' meetings, gone back to the desk, and then rung every client and sold out of that stock because you can tell that they're not telling the truth. One, their body language when they come in is very downtrodden, shoulders are hunched over. They look like they've been beaten over the face. Magellan, right?
Yep.
Management coming in every 6 months, and you could just see this
Deflation,
and you could tell that there was something not going or something that wasn't right. And it was that, and then the content of their talk is down, earnings downgrade, down this, down. You know, you can get that feel. And then when you ask them the questions, you can tell that they're lying. They're just giving you what the company says that they should say, but you know that there's something behind it. And then from there, also, you know, we've got someone like Evolution Mining or Northern Star or Newcrest or Lithium, IGO. And so they've got this tenement, and we know the company next door to them, right next door to them, and we ask the company, oh, how's Newcrest going with Telfer? What's going on? Oh, yeah, they're having some problems. Oh, I saw some trucks there the other day, da-da-da-da-da. You're getting an understanding of what's not just their tenement, but the whole area, the sector, and what could potentially be some problems that they're not telling us. So by having 300 companies in a year, you get to hear the same story over and over, and you can pick out the BS a lot quicker because you've heard the same thing, because they all say the same thing. Our company's the best. We can do this. We're going to go growth, da-da-da. But behind it all, you get that feeling, and that, I think, is, I'm going to say the vibe, but that is what makes a lot of our investment decisions. And it's not about the press release, it's not about the EPS, although, I mean, that obviously takes into consideration, but it's when you're sitting down with these guys, and if they can continually come in every 6 months and tell you the same story but improve on it, you go, this is a good company, this is well run, we're comfortable to put clients' money into it. But we also look at fundamental analysis as well as technical analysis. So we pay a technical analyst outside of Shores to give us price points of up, where it's going to hit on the top end, where it's going to hit on the bottom end, and then he might say it's a buy, it's going to go to what technically it looks like a buy. Then we get the fundamental analysts, which is where all your numbers and Shores research and all the other streets research, they say it's a buy, and the technical guy says it's a buy. Then we start moving in, because analysts for BHP would have told you that it was a buy at $50, would have told you it was a buy at $15 through the GFC, and tell you today it's a buy at $34, right? But the technical guy will go, no, it's a sell. Yes, it's a buy. He said it was going to get to $11 and it went to 15, but that was fine because we were buying it when he said, as well as the fundamental. So there's lots of stuff that goes in.
Well, I think the interesting thing from our point of view, and for clients who are listening to this, is that insight, sort of the under the hood insight into how you make decisions about what shares ultimately we're putting in front of clients in this boardroom is pretty insightful. Maybe if I just change tact a little bit, just in terms of market, you talked about that you began in the GFC. Yep. That was obviously a bit of a baptism of fire, you heading into markets, which, like, maybe just talk to that. I know from my experience, it sort of was one of two ways. It was either looked at it with extreme pessimism, or we looked at market downturns with a sense of optimism that crisis created opportunity. You've probably had 2007, 2008. We've had COVID in 2020. Mm-hmm. How have you found those? And I suppose how has that positioned you to deal with, obviously, the reality that another downturn will come to us at some point? How's that shaped your thinking?
Never waste a good crisis. That's it. Like,
did you have positive memories of your first foray into broking? I mean, was it easy? Was it hard?
It was tough. It was tough. It was the bottom of the GFC. We've had 2 years of negative returns, and it was death by 1,000 cuts. Every day you'd come in, and it would be worse and worse and worse. But I learnt back then, and this is where your advisor becomes invaluable. Financial planning, stockbroking, your advisor becomes invaluable, because I was picking up clients because they said my broker never spoke to me, right? So he would speak to me when things are good, but when things are bad, and I haven't spoken to him in a year, 2 years, or whatever.
He's missing in action.
He's MIA. Yeah. So that was a great lesson for me, because I will talk to clients even if we're up $100,000, $1 million, whatever we're up, I'll talk to you. But if we're down $100,000, which is a lot of money, if we're down $1 million, it's still a lot of money. I'm going to sit there and say to you, this is the issue. I'm here to represent, I have a plan, but I'm here to talk to you, and not hiding from the tough conversations as well as and that's what the GFC taught me, is not to hide from those conversations, and you'll keep clients for forever if you just talk to them and be honest with them. So we definitely, through that GFC, it was a tough time, but every time now, and I'm 50 now, so let's say I've got 30 more years.
Happy birthday for July 22nd, mate.
Thank you, mate.
I got it right that time,
you remembered.
didn't I?
It was great. I know that in my 30, we've got another, say, 30 years to go, I'm going to see another 3-4 downturns. And what I talk to clients about is that if you can get it in your head that there is going to be another 3 or 4 downturns in your lifetime, yes, it's going to be painful, but they're the opportunities that you've really got to go in for. And it's tough when everybody else is running away from the fire because you're running towards the fire and going, yep, I'm going to be putting more money in. I know it's the wrong time, but this is the time. And that will pay off in huge dividends. And you then, when the crisis happens, we talked about this. We sat down and we said that there was going to be another one. So I'm not going to panic. I'm not going to worry about it. I'm just going to keep a level head and potentially then start to buy some more, because this is the time when you want to be topping up. So GFC was a major lesson as any broker, but then also every crisis that we've had since, and there's going to be more. The advisor, we earn our stripes by talking to clients, making sure that they're okay, and not doing stupid things like sell everything. Now it's your money, so if you want to sell it, I'll sell it, but I don't advise that that's the right thing to do. Okay, and then talking the client off the ledge. And then in like COVID, the market fell by 20, 25, 30%, and it retraced back up within 3 months. There was clients that sold at the bottom thinking they were going to get it cheaper, and then they had to buy back at higher prices, and they've just destroyed capital, where you could have just sat and watched it and waited and in fact been a bit in a better situation. So yeah, it taught me never to waste a good crisis. Yeah. Always take advantage of it.
And I think the value of relationships, I know from our experience and from the experience we've had with yourself and Sam in your willingness to actually talk to clients, is that the relationship is everything. Like if you can actually educate clients and prepare them for the inevitable downturn, then it's not a surprise. We have a plan. We can rebalance portfolios. That's why we make sure that we understand people's tolerance to risk and what they're happy to accept. And that roller, I remember a graph or a visual that was shown nearly every seminar I went to when I was my first 10 years of financial planning, probably after, during and then after the global financial crisis, this roller coaster of investor emotion where people, they've got some optimism, then they become more pessimistic, then they start to shit themselves, then they sell out at the bottom, and then they think, I'm not getting back into the market until it's good again. Yeah, and they've lost optimism, and it goes back. Lost that entire upside potential. And I think having good people in your corner, which is one of the things that we've tried to emphasise across all our clients, and particularly with this podcast, is actually introducing clients and people out there who are potential clients to the external relationships that we surround our clients with, because it isn't just a team of one. The support that we provide to all of our clients comes from many people doing many hours of work and research, but also having great relationships with those people, clients and people like Sam and yourself. It's so important to get the best outcome we possibly can for our clients.
Yeah, absolutely. And the whole idea of that relationship is that it's going to last through the tough times. So if you don't, and I've had clients leave me because they felt non-connected to me again, right? So I'm like, okay, but we asked you, 6 months ago or even 3 months ago, is everything okay? Yeah, everything's fine. Okay, well, all right, no worries then. And if the client's not talking to you, then there's obviously somebody else is talking to them, right? And then from there, then the hard conversation, and there's no hard feelings for when clients leave, because that's what happens. But it's all about, and I say to people, it's a two-way relationship. Like, it's not just for me to call you. You've got to be sitting in the traffic and go, I'll give Adam a call from Shores. How's everything going? Yeah, great. Everything's fine. And be front of mind. So it goes both ways. I think a lot of clients sometimes feel that we are the ones that should be making the initial and continual contact. But I try and get my guys to be more open and sort of talking. And if we're talking, then if there's any problems, we can fix it. If I can't fix it, well, absolutely, then it will help you find somebody else.
Yeah, for sure. I think that encouragement of people to reach out with queries and concerns, it's a key to actually having positive ongoing relationships, is making sure that people feel comfortable to come to you with queries, whatever they may be.
The key word is relationship, and it can't be one-sided. It's got to be both, and that's how we're looking after your money, absolutely, and we're going to do our best possible, but you've got to make an effort too. You've got to be the one to also call us and say what's going on. Yeah,
it's definitely a collaborative effort on all parts. I said we wouldn't talk too much about markets, but it'd be remiss of me not to pick your brain a little bit or get your thoughts. I think maybe episode number 2 on this podcast a couple of years ago, you might not have remembered. It was called, Russia, Rates and Recession. I think we've had a fair bit happen on the Russia and rates front in the last couple of years since we last had you on the podcast. Definitely. And then the recession's probably still bubbling, potential for that for us to dip into recession. Without getting too bogged down in the weeds, what's your broad view on where the market's at the moment? And then I might even get you to touch on what you're liking, industries that you're liking, sectors you're liking.
I think the US is less of a chance of recession now. I think they're saying like 50 or 40% chance. It was 70% a couple of months ago. So they are looking at potentially still the US to be moving into some kind of technical recession. But here in Australia, we're going to sidestep that. I think iron ore is still over $100. We're still making a lot of money. GDP will still continue to rise, albeit very small, but we will not technically go into a recession. So that's the recession talk out of the way for Australia. Obviously, the US and Europe is a very different story. Europe's going to come into struggle this winter because they had a lot of gas reserves. When we're talking about Russia, they had a lot of gas reserves last year, and I think I even said this last time. It's not this year that you got to worry about. Sorry, it's not last year you got to worry about. It's this year you got to worry about, because those stores are now been depleted, and they can't get enough if they're not buying from Russia to refill that. So that's going to be an issue for a European winter, which might drag on economic growth. The ASX, I'm really excited about talking about all that stuff. I'm really excited about the next 2 to 3 years. I think we're going to go through one of our biggest secular bull markets that we've ever seen.
I like
in the
it.
Next,
that's what we want to hear.
Yeah,
optimism.
Yep, 2 to 3 years. The reasons why is inflation has gone up. Inflation's coming back down. We're going to manage that inflation from their interest rates. They're going at their peak potentially, or we can see the top of the hill. Maybe there might be 1 or 2, but they're starting to talk about May next year. They were saying December 6 months ago, and for interest rates to come off, they're saying May. So still might go a little bit further out. But as interest rates start to fall, all growth stocks around the world will start to fire up again. And from that, when interest rates come back down to a normal level, whatever that normal level is, 2 to 3% in the US, 3 to 4% here in Australia, growth will continue to come back on, and that growth will be like a wildfire, because we've had COVID, we've had our 1 in 100 year pandemic that's been done, taken out, and now we're just getting the aftershocks of that pandemic or coming through, which then growth, as interest rates start to come down, will go boom, 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 and everything will move higher. So I'm really excited. We've just got to get through this next 6 months, 6 months to 12 months, but next 6 months. Once we get past that, markets will do very, very well.
What do you see as the biggest risks in that next 6 to 12 months?
Inflation staying high and interest rates staying high for longer, where they can't bring them down. But you've got unemployment. It's perfect. Low unemployment, which means interest rates are going to potentially stay up, but low unemployment, so there's no stimulation of the economy. Wages growth is falling in the US, and that's the key. Here in Australia, wages growth is increasing, so it's a bit tougher. As well as then inflation is now starting to come back to a level. US has got it back down to 3%. We're still at 6s, so we're 6 months behind the US as far as what's going to happen. But as always, the US will lead us in and lead us out of these crisis.
Talking about the US being in or out of something, the Russia-Ukraine conflict, do you think the market has effectively priced any surprises they're into the market, or is there something that could still surprise the markets with the Russia-Ukraine issue?
So with any kind of major world event, it's the knee-jerk reaction at the start, and then as it gets talked about more and more, we become more desensitized to the whole thing. And it's not on the 6 o'clock news anymore. You can find it on a website somewhere or YouTube or whatever, but we all become desensitized and the market's moved on. Now, if they hit a nuclear power plant or a bomb gets thrown over a nuclear bomb,
Or the US decide to put boots on the ground.
something like that, then it's a different story. But as it stands at the moment, markets are very, very aware of what's going on and not really. We've all moved away from Russia. We've all seen Nike. We've seen all of the big US companies that have taken a 4 to 5% revenue cut from getting out of Russia. So that's got to go somewhere, but that potentially might come back once it's opened up. But yeah, I think the markets have moved on.
Yep.
And yeah, we should be okay.
So domestically, obviously, when you look at our clients' portfolios, the bulk of the assets sit held domestically, obviously influenced by the world markets. But what are we seeing sector-wise? You mentioned iron ore. Obviously, there's a big push with the green movement, which I think a lot of people mistake for thinking, well, that means that we're never going to need any more minerals or metals, when probably the complete opposite is in fact true.
Yep.
I know in looking at some of the portfolios over the last 12 months and some of the changes in the portfolio, obviously during COVID there was a big push towards medical technologies, and the shift seems to be more to sort of minerals mining over the course of the last 6 months. So what are your thoughts there on where the market domestically is going and where we should have our money, Adam?
Yes, domestically, there's a couple of themes, and certainly lithium has been a big theme through the
like that.
portfolios.
Yep.
All right, so it's all battery technology. If the batteries can and will do better over time, there's more and more lithium and copper are the two plays that we're going for inside of the resources space. So we need to be in lithium because I still feel that battery usage is still going to double and triple over the next 5 to 10 to 15 years.
You mentioned something at lunch about the number of charging stations that we currently have and the number we actually need, which kind of goes to how much more supply is required. Yep. What did you say? There's like 5,000 charging stations and we need 100,000 in...
So 20-fold increase in the next... to 2027.
Wow.
So there's a small company that we can talk to you about, but there's a small company...
I'll make a little caveat here that nothing that Adam or I says is advice. This is
Please seek professional advice before you do anything.
There is a disclaimer at the end of the podcast, but carry on.
IPG, so it's IPD Group, is electronic charging station business growing here in Australia. Currently $4, $4.20 or something like that. We've got a research. They just upgraded earnings the other day. We've upgraded our price target to over $5. That makes sense because if you follow the amount of EVs that are being bought on an annualised basis, there's only about 3 million here in Australia, but that's a lot for Australia, and it's set to double and triple over the next 2 to 3, 5 years. So they need the infrastructure because we've got such large distances around Australia. They need that infrastructure, and it's called range anxiety.
I was going to say what you mentioned that at lunch too.
Yeah, which is basically going from Melbourne to Sydney. It's an 8-hour drive, but your car can only do 6 of those hours as such, or 600 kilometres or whatever. So you're going to need to have charging stations all along the way for people to continue to buy them. Now, we've seen Smart Group and Macmillan Shakespeare, and the government has said that they're going to give rebates back for novated leases on electronic vehicles. For a vehicle that would cost $80,000, it would now cost you $60,000 because in the first year you get $20,000 rebate from the government to buy electronic vehicles. So it's happening. The rebates is happening. The novated leases are moving. They're buying, and it has to happen now that the infrastructure has to follow because it's got to keep up. And so, a small little company that we've been working on and doing some stuff. And again, I saw them last week. They had their results, sat down with them, looked them in the eye, said, okay, how's everything going with this? Because they do a lot of other electronical businesses, not just charging stations. And yet really comfortable with management, really comfortable. They looked me in the eye, they were honest. They gave us the right answers to the questions because we know how to ask the right questions. And so we're going to continue to keep buying or putting clients' money into that kind of thematic that I think is definitely going to grow.
So charging stations are one thing, but where the electricity comes from to pipe through those charging stations, I know it's kind of, I suppose it's gathered a little bit more steam of recent time, this idea of nuclear. Maybe not in the near term domestically, but what's your view, and it's a question without notice, but your view of where nuclear sits and whether or not it's something that we should have an exposure to somewhere through the portfolio?
So with all commodities or businesses that relate to commodities, you must look at the underlying commodity to see how that's going, to see how the businesses are going to produce going forward. So iron ore at $100, it costs BHP and Rio and Fortescue $20 to make a tonne of iron ore, and they're selling it into the market at $100. They each do 188 million tonnes a year. I don't have a calculator big enough with the zeros on it to show you how much money they'd be making for that, right? So at $100, they can sell it, they can make it for $20. So uranium is a classic example that needs to be, and especially with the companies that we're talking about, they need to be able to pull out a tonne or pound of uranium for a cheaper price than what the market is at the moment. Hence why uranium has always been a negative in the market. Take the Fukushima side of thing out of it. It's just a commodity that's always been very low priced, but it costs a lot of money to get it out of the ground. So currently, uranium's sitting at about $50 a US pound, $50 US a pound, and we expect that to go up to $80 a pound in the next 2 to 3 years, just on supply and demand. So that means Paladin, some of these bigger uranium companies will do very well because they can pull it out of the ground for $15, $20 a pound, and then they're going to be selling X amount into the market. The reason why that the uranium price has started to firm up is a business called Sprott Asset Management in Canada. They actually created a uranium fund and were basically net buyers of uranium for the last 3 years, which means that there's supply shortages now starting to come through, which means that everything's going to start to move. Plus then you get the ESG tailwind, which nobody really wants to talk about because they've got Fukushima in their mind. Yep. They've got the uranium mines in Midnight Oil singing, get rid of Jabiluka and all this kind of stuff, or save Jabiluka. So yeah, you've got all that. And so the ESG side of things is that it is a very clean resource and energy source that will go for years and years and years.
It's kind of hard to argue with, isn't it? I mean, you look at the cleanliness of nuclear, again excluding some of the Fukushima and what was the one in the Ukraine?
It's going to come to me,
Chernobyl. Comparatively to the amount of people that die as a result of air pollution or in third world countries burning coal or burning timber in their homes. It's hard to see how it doesn't gather some traction, some legs.
So China's producing probably another 20 plants in the next 2 to 3 years. France is turning on 2 or 3 of their used reactors, but creating another 3 or 4. I think Britain's doing 1 or 2. America's definitely firing up a raft of uranium mines, power plants. So it's all boiling, and there's a lot more talk about it, and potentially a little bit more acceptance of it. It's been a tough one to go through. We like a couple of companies in that space. Paladin is a very good one. They're going to start up production, I think, next year. NextGen is another one that we like. But we'll only put that into clients' portfolios if they understand the risks and they understand the business, because there's nothing worse, and we've done this with a couple of the clients for something like Aristocrat, where we love the business and it's done really well in clients' portfolios, and we were buying it at the bottom end and we started to move higher, but a lot of people don't like gambling. And it's totally understandable. It ruins people's lives. And Aristocrat is literally the pokey maker. So, you go into an RSL on a Thursday check day and it's full. So I understand that. So people have to be aware of what they're investing in, but also sometimes something like a uranium, it's got all the right hallmark, the building blocks for it to really start to move forward as an investment case as well as anything else.
Yeah, I think this probably goes back to, like you said, people understanding and being involved in their own situation, asking questions, and us as advisors also asking the right questions to make sure that we're aware of people's preferences and so on. Mate, we probably should wrap this one up.
Yes.
We've got a dinner tonight with a few more clients. First of all, thanks again for making the trip down from Sydney to be with us today. For those people out there that want to know a little bit more about Shaw and Partners, and specifically Adam Dawes and Sam Crompton, tell us how they can get, other than coming through Burke Britton Financial Partners to get a hold of you. How can they find you on the interwebs? How can they get in touch with you?
Well, I'll always say, speak to you guys first, because that's absolutely where it should be. From that, I think you can just Google. But Shaw and Partners, we sponsor so many people, so sort of things like that. So, but Shaw and Partners, look us up. I've been with the firm 20 years. The firm's been 32 years running, so it's not a fly by night. A couple of guys in a computer in a room. There's a lot of substance behind what we do.
Beautiful. So Google Shaw and Partners, Adam Dawes specifically,
There you go.
Or come and see us at Burke Britton. Again, Adam, thanks very much for your time. It was a great chat.
Yeah.
Thanks for telling us all about your Canberrian days, and I look forward to having you on another episode.
Can't wait. Thanks so much.
Cheers, mate. We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, and Twitter at Burke Britton FP, or Google Burke Britton Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
All right, hit it.
That translates to, don't be a moron and act on what some random person says on a podcast. Take personal responsibility, do your homework, ask questions, and speak to an actual human that knows what they're talking about before you do anything. PB Financial Solutions Proprietary Limited, trading as Burke Britton Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.